Welcome back to the Opportunistic Trader for August 16th, Thursday, over Hump Day. Yesterday was a very good trading day, probably one of the better ones in months. We had movement across the board in all sectors. We had a decent trading day yesterday for the Opportunistic Trader. Our trades worked out pretty well. We were swing trading in both the S&P and oil. There were very, very large moves in both sectors. We went out the night flat, so we haven't established any positions yet. Looking at the markets, we think that the S&P is a little bit of a fade. I would want to be a buyer of oil here. Pretty much all commodities. And I'm joined again by Vince, my partner in crime in our 8 o'clock roadmap. He was out yesterday. Probably, interestingly enough, he's our gold guru, and gold probably had its biggest move in years overnight as well as yesterday. So I'm glad to have Vince back. And I just wanted to go over the overnight action so that everybody is up to speed here. The mantra is a couple of things. One, last night it was weird to me. The market came all the way back. The market on close orders were for sale, heavy into the close. Somehow that disappeared with a couple of minutes to go and then reappeared with a few minutes to go, which was surprising to us just to look at. And then at the end of the day, the cash went out at about 18, and they ran the futures up to 22.23, which is a $5 premium, and now they've boosted it with another 14. So we're pretty much where we were on the opening yesterday, which is always shocking to me, but interesting that they can save the market off of fake China meetings or whatever, and when the real stuff is out there, they pretty much disregard. But at the Opportunistic Trader, we're on top of that mantra and trade accordingly. Scouring the globe at this point, looking at Asia again, a bit weaker, nothing crazy, but slightly lower, did not rally at all off of their lows. They may have an effect today with the talk of a meeting, which I don't know. They could always talk about a meeting, but maybe get a little bit of rallies in ETFs across the Asian sector. Going across the pond to Europe, the DAX was down about 200 points yesterday, which was pretty large, and closed on the lows. And again, it's up a little. The last time I checked it, it was up about 60 points where it is, and really not even recovering a third of the down move, where we've recovered the whole down move and are higher. So obviously no correlations between anything to the U.S. as far as equity markets. We're the only market really up on the year, and it continues to be that way. Looking at the currency markets, the dollar is a touch weaker across the board. Surprisingly, we thought that it would probably be the other way. The better traders overnight obviously was gold. Gold was down about $18 overnight, which was a very large move. Saw heavy volume out of Asia, hitting stops, and we thought that it was a buy down there. That may be the bottom for this move. It's Vince will go into that in a bit, but that was a really good trader. Oil yesterday was down a couple of bucks, $2, which doesn't sound like a lot, but it's 4 or 5%. This will be the 8th down week unless oil rallies $2.50 in the next 2 days, which anything is possible, but it should be a down week. It'll be 8 weeks in a row, which is a lot. The market's completely oversold, but we have an option expiration in there today, so we're sticking around the 65 strike, and looking at the straddle, it's pricing in less than $1 move. So unless the options are wrong, which they can be, they're not expecting, much more than a dollar move in there. Looking at bonds, yields continue to creep a little bit higher, and every time we get into the low 280 handle on the 10-year, it creeps back to 290. So I think we're around 288, 289. Again, the bond is a fade up there, and I think you'll see a trade above 3%, and when you do, we're going to be there. But right now we see a no trade, and that's sort of it. Looking at everything from yesterday and the overnight. Today is not an option expiration in the equity indices. It's a Thursday. We could take a look at the straddle. Volatility came in pretty good. So, straddle pricing is about $14, $15 for 2 days, which is kind of low considering yesterday was 13.5, and we obviously moved more than 13.5. So volatility remains cheap from what we see, and we'll keep an eye on that. We'd like to fade the opening in S&P, hoping it gets a little bit higher. I'm going to try to get short it closer to the opening. This is indicating about a 250 point up opening. Cash versus where the futures went out. So even though we're up 14 in futures, we're really up 20. So you got to keep that in mind. And overall, that's sort of the overnight. So I'm going to throw it to Vince. And, Vince actually had a travel day yesterday, so he saw the action, but I think he was at 40,000 feet at that time. So he'll fill you in. Good morning, Vince.
Good morning. I don't have much to fill in except that I'm in mourning because the day before yesterday, I'm going to be very brief here because we have a tight schedule. The day before yesterday, and I was asked a very good question by Mike, and basically it's like, how would you play it from here? I said, well, I think we have another washout move coming, likely. I'm not quoting myself. I'd like to buy a 20 delta put and over hedge it. And when that opportunity came, I was not on a desk and did not leave instructions for someone to trade. I don't leave instructions for other people to trade options on my behalf. So I missed out on that. But that said, there are a couple things that happened yesterday. Yes, I missed out on a day. It's trading day. Missed out on some big trades. But there are three things that happened that that tell me that we might have put in a bottom, and there's some good trading levels intraday for active trading today. First of all, the last time I saw what I'm about to tell you, I saw on December 11th, December 12th, 2017, and it was in fact the bottom for 4 or 5 months. Actually did an interview on it and traded it. So here's what it is basically. When gold has an exhausting move, a sell off without the dollar doing much, as I think Greg pointed out as well, that's usually the panic sellers that have to get out because they have to get out of gold. We can get into the macro and about that, but that's not the point. The point is gold is a thinner traded market, so it overshot where it should be with the dollar. By my account, up to $20 overshot. Then you have a market that makes a lows, and Asia trading is more important. If we close above 1185, right now we're trading at 1180. Let's see, it's 1180 spot, 1187 in December. If we close above 1185, I am not going to be taking home any shorts. If the market opens up in Asia above 1185 after today's close, I will be looking to get long. Now, more to the point of active trading intraday, it's actually pretty simple. Because I would not have had these numbers had we not made the lows that Larry described last night. And I think he put out on Twitter himself that this was probably a good level to buy for a nice trade, if not a short-term bottom. But here's the numbers. Because of the move we had last night, between 1179 and 1185 basis December, that's the dead zone. If we go above 1185, I will look, and I'm not buying right now, but I will look to buy for a trade up to 1193. Okay. If we go below 1179, I will look to sell for a trade down to 1168. Opposite sides of 1179, 1185 are the stop levels. I will not take home shorts, especially if we are between 1179 and 1185. That said, if you're looking to trade lower or higher, actually, you should be looking at shorter term time frames. 15-minute charts is what I'll be looking at today, because other than that, you're left looking at macro supports in the 1140 area for gold. So that's it, basically. I'm looking to buy above 85, and I'm looking to sell below 79. And this could be a multi-week bottom if the market closes above 1185. Larry, I have a couple oil numbers too, if you want those.
Sure, I'd like to definitely talk about oil. I'm a little bit opinionated in oil here for trade, but I'd love to hear what you have to say. And
I have three numbers. It's system based. I'll just throw the numbers at you, and then you can work it from there. I'm looking basis cash, right? That's where the numbers come in. And I have three numbers: 65.20, 64.98, and 64.77. And these, option expiration is going to weigh heavily on this system today. But above 65.20, it's a buy. Below 64.77, it's a sale for an hourly trade, and anywhere from 1 to 3 hours. And those two numbers are their stop outs. So basically, that's kind of the momentum trade for today. If we break 65.20, we've broken the strike and we've broken gravity of it, and it's a buy for 1 to 3 hours with 64.77 stop. Chances are I'll be stopped out on these trades because of expiration as we close on pinning the strike. But it offers two bites of the apple. Okay. It can be bullish above 520 and bearish below 480, 477.
But when you say that for our viewers, what are you looking at specifically? So if let's just hypothetically say you put your stop in at 65.20. We're trading at 65.15. So and literally when the algo kicks in a couple of seconds or whenever, you're going to be stopped in. So my question is, what are you looking for when you buy? I get the time frame, which is great, but I'm just curious. What are you looking for? Are you looking for a quick 20-cent pop? Or are you looking to stay in it for an hour or two?
Yeah.
Do you think the level goes, much higher? Like, do you have levels above that there may be, short covering because it's been selling for significant weeks and days here? So I'm just curious so that you could let people know.
It's actually very straightforward, and it lacks a lot of the things that you're saying, and that's where the intuitive part comes in. I will give you the trade that's lining up right now. In 46 minutes, if the market is trading above 65.20, I will enter a long. And that long will be held with a stop loss on 64.77 print. The long will be closed when it hits a target of, and this is the point of why the system is not technical, it will hit a target of 2 times what we're willing to risk on the loss. So 64.77 from 65.20, take that, multiply it by 2, and there's your target. At that point, you decide if you're going to trail stops or use technical numbers.
So you're saying that you would get out at basically above $66 is what you're saying?
Yeah, but it's not technically based, and it's not flow based or anything like that. It's really, I believe there's an asymmetrical opportunity that the market will continue and skate for the next 1 to 5 hours when it gets above 65.20. So here's the trade. It gets above 65.20, you buy it. 64.77 stop goes in first. Then you multiply that amount by 2, and that's your target. At that point, then you start to look at technicals. There's one other stop. Because this is a volatility trade, and this is to your point, if you don't get your move within the first 3 hours, if you're not in the money in 3 hours, it will liquidate. That's basically it. You will hold the position.
But my question is, you mentioned something about a 9 o'clock time frame. So it just clicked 65.20 for a split second. You're not doing that trade now. You're doing that trade in 40 minutes.
Right. We're not talking about constant volume bars, but right. The market, the bar, here's how it works on this hourly system. The bar has to close above 65.20 at 9 a.m. So it's really not a black box, it's a brown box. If we're above 65.20 at 9 a.m., I will buy the opening of the next bar.
Okay.
I will look to.
Okay.
Here's one problem with that, and this is why you can't just follow that blindly, why it's not advice, why you have to think as a trader. If we're trading 66.20 in 45 minutes,
Right, that's
obviously I've missed the boat.
right. But my question is, okay, so it's right now 65.20 on the highs,
Right.
pretty much
Right.
of the morning. Probably hit some stops above 35 here. From what I see, again, I'm constructive on oil for a trade. But what I'm asking you though is, so in 45 minutes, if it's at 65.50, are you buying
Right.
it there?
Right. Well, what ends up happening is it'll move your stops higher. So based on volatility, if it's at 65.50, we would buy, and the stop goes to that middle number, 64.98 I gave you.
Okay.
And then if it goes 30 cents above that, then the stop is 65.20, and then above that you just don't play.
Okay.
That's basically it.
It
doesn't mean it's not a buy. It doesn't mean you won't get stopped out, and it won't be a buy for different reasons. It's just that low-lying fruit trade will be wrong. That's it.
Okay, just one quick question. Why are you waiting for 9 o'clock? Is it because of the opening or something?
The bar, no, it's that's a coincidence. It's if you're using an hourly system that you have to be out in 5 bars, you have to use the close of a bar. So it's like a daily bar, right? Or a candle, I should say. The market closes above 65.20 at 9 a.m. when my hourly bar closes or candle closes. Then I actually get the final trigger to get long. And if I'm wrong, it will give you a second bite at the apple to reverse. So usually when you're wrong, it's like a Tudor Jones type of trade. You're in, you're stopped out. You're in, you're stopped out until you're finally right. But you get 2 bites at this only. And it has to be at the beginning of a bar or a candle.
Oh, that's interesting.
And it's not technically, and what you just said is important. So for example, if while we're talking, and I don't want to take too much time, if we trigger if there's stops at 65.35 and we trigger those before the hour is up, chances are, right, my system will say the risk reward's not there anymore. You, however, have gotten a breakout on my system, and you're saying I'm going to buy, possibly saying I might be buying pullbacks at 65.35 because you think they're still buying there. That's something my system won't let me do. That's where I have to get into something that you do.
Yeah. I mean, I look at it obviously differently, but what's nice about it is that, we're both trading it and we're both able to make money and help our members and our audience basically have the opportunity to look at, 2 different methodologies on entering trades and exiting trades and all of that. So I do think that's interesting. The crude oil move is a surprising move to me. It seems option related. It's funny, last expiration, which was a month ago, kind of the same action where we had a massive down move into like the 68 level from 73. We've had multiple weeks again, like I said, of down. Market trades heavy. I think there's been a big commodity liquidation across the board from what I see, creating opportunities here. But, from what I see, when a market's wounded like this, unless we get extensions, okay,
yes,
50 to $1 higher from where we are now in oil,
right?
People are going to try to fade, and you're going to build up a short base, and then, they'll rip higher off of some type of news or whatever. But, oil's been a really, really good trader. The S&P and NASDAQ have been great over the last couple of days. I have to say I'm a little surprised that the market opened up in here. I'm happy. I'm going to wait a little bit. We'd like to sell the opening. We do feel there could be a retest in here to lower levels. I don't think yesterday's low will be taken out, believe it or not. I think yesterday's low was 28.03. I'm not looking at it, but if my memory serves correct, we were down in that level. So we've rallied significantly from there, and we're back, to the higher end of the range, which is surprising. But somehow the market always pulls this off. So, it'll be interesting, to see how the day finishes. I think there'll be a lot of trading. I still don't understand how, all these other markets are not at all bid. I mean, they're actually for sale. So, in a mean reversion way, the U.S. to me looks like a short against something else, but that would be not a day trade. That would be a bit of a position trade.
Right.
We're looking at NASDAQ versus S&P today. On the equity front, stock-wise, looking across the board, pretty much Apple was the tell yesterday. Apple closed up 65 cents. It was positive on the day with the market near the lows. It's up another $1.50 today at an all-time high of $211.75 pre-market. It's a pretty amazing move. And Facebook was down at about 175 yesterday. It's trading about 181, so it bounced back. And Netflix is the laggard. It's up 1% this morning at $3, up $3 at 329 and some change. But overall, that's the laggard. That's probably the one that you want to sell. And Amazon is back above 1900, so we'll see how that trades. And banks are a bit stronger across the board, but the big one today is Walmart had earnings. They did good with their e-commerce. The stock is up about 7%, almost back to 100. It's funny, every time the stock goes into the low 80s, it's a buy, and every time it gets up to 100, it's been a sale. It's been that way for a couple of years. Right. So, that's it on the stock side. As far as numbers today, we have jobless claims at 8:30, housing starts at 9, Philly Fed, numbers that I don't think are market moving as far as that goes. And we'll keep an eye on news all day. I would just like to say that we're going to be joined by Tracy, our expert in crude oil, and she's going to be discussing the role and thoughts in the oil market. And obviously the role is very prevalent today as an option expiration, so the current contract is going off the board in the next 4 or 5 days, so she'll fill you in on all of that. And then we have Bryn talking about nat gas, energy sector, and electricity. She's very, very informative, and I always listen to what she has to say for long-term, macro in that space. So that's our schedule for today. We will be in the chat all day with trades, ideas, thoughts, and information to help you guys manage through the day. And I'll be back pre-opening to discuss any trades that we did or what we're looking to do, and any changes in the market right before we open.
8:23 right now. We got the number coming. I'll see you in the chat, Larry. I'll be
Okay.
there.
Thanks, Vince.
Right.
Good to have you back.
Thank you.
Good
Thank
to
you
have
so
you
much.
back.
Maybe if I go away, gold will move again.
We need you to take a vacation. Not see it.
Exactly.
All right. Thanks.